Summary of the book The Ascent of Money, A Financial History of the World by Niall Ferguson. Introduction. Dreams of Avarice. Niall Ferguson begins by highlighting how finance is a vital part of human progress. The book aims to demystify finance and present it as a key component of civilization, likening it to the ascent of man. He emphasizes that understanding finance is crucial to comprehending the rise and fall of empires, nations, and individual fortunes. Chapter 1. Dreams of Avarice. This chapter explores the origins of credit and debt. Ferguson traces the earliest forms of money back to ancient Mesopotamia, where clay tablets were used to record transactions. The development of money allowed for the expansion of trade and the establishment of more complex economies. Ferguson describes the Medici family in Renaissance Italy, who revolutionized banking by developing a system of double-entry bookkeeping. This innovation enabled them to manage large amounts of capital and become one of the most powerful families in Europe. Chapter 2. Of Human Bondage. Ferguson explains the evolution of bonds and their role in funding wars and governments. He discusses how the need for large sums of money to finance wars led to the creation of national debts. The chapter covers the history of government bonds, starting with the Italian city-states and moving to the Dutch Republic, where the first true national debt was established. The English followed suit with the creation of the Bank of England in 1694, which issued bonds to fund wars against France. These financial innovations laid the groundwork for modern capitalism. Chapter 3. Blowing Bubbles. This chapter delves into the history of financial bubbles, beginning with the South Sea Bubble of 1720. Ferguson describes how speculation can lead to financial manias, where asset prices become disconnected from their intrinsic value. He outlines the key elements of bubbles: easy credit, investor overconfidence, and the eventual crash. The chapter covers several famous bubbles, including the Mississippi bubble in France and the more recent dot-com bubble of the late 1990s. Ferguson argues that bubbles are an inevitable part of financial markets and that understanding their dynamics is crucial for investors. Chapter 4. The Return of Risk. Ferguson examines the development of insurance and the management of risk. He traces the origins of insurance back to ancient Babylon and China, where merchants used rudimentary methods to protect against losses. The modern insurance industry began in the coffee houses of 17th-century London, where merchants gathered to share news and insure their cargoes. The chapter covers the development of life insurance, property insurance, and the rise of the reinsurance industry. Ferguson highlights the importance of actuarial science and statistical methods in assessing risk and setting premiums. Chapter 5. Safe as Houses. This chapter focuses on the history of the mortgage market and the housing bubble of the early 21st century. Ferguson explains how the desire for home ownership led to the creation of complex financial instruments such as mortgage-backed securities and collateralized debt obligations. He discusses the role of government policies, deregulation, and the behavior of financial institutions in fueling the housing bubble. The chapter concludes with the 2008 financial crisis, triggered by the collapse of Lehman Brothers and the subsequent global recession. Ferguson argues that the crisis was a result of excessive risk-taking and a failure to understand the complexities of the modern financial system. Chapter 6. From Empire to Chimerica. Ferguson explores the relationship between China and the United States, which he dubs Chimerica. He argues that the economic interdependence between the two countries has been a driving force behind global economic growth. China's high savings rate and trade surplus funded the U.S. deficit, allowing Americans to enjoy low interest rates and cheap goods. However, Ferguson warns that this relationship is unsustainable and poses risks to the global economy. He discusses the potential for a shift in the balance of economic power from the West to the East and the implications for international finance. Conclusion: The Descent of Money. In the concluding chapter, Ferguson reflects on the lessons of financial history. He emphasizes the cyclical nature of finance, with periods of innovation and growth followed by crises and downturns. Ferguson argues that while financial markets are inherently unstable, they are also essential for economic development and progress. He calls for a better understanding of financial history to avoid repeating past mistakes and to navigate the complexities of the modern financial system. The Ascent of Money provides a comprehensive overview of the history of finance, illustrating how money, credit, and financial institutions have shaped human civilization. Ferguson combines historical analysis with contemporary examples to make a compelling case for the importance of financial literacy. His narrative highlights the interplay between finance and politics, the recurring nature of financial crises, and the critical role of financial innovation in driving economic progress.